Manufacturing activity weakened in several countries just as investors await monetary policy decisions in the U.S. and Europe. Shares in Nokia surged among speculation that Chinese PC maker Lenovo may be interested in the struggling cell phone maker. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey with The Street, and together we bring you the Morning Call Express. Overnight, we got a number of PMI numbers across the globe that were weaker than expected, but that's just continuing with the trend of slower growth in general across the world. Today, though, all eyes turn to the Fed and their decision on monetary easing. I think people have lowered their expectations, but what are you looking for in today's statement?
I think last night's news is the same macro thesis. We have growth slowing around the world, but then you have the hopes of stimulus and hopes of policy that could help, ward that off, which obviously it hasn't been able to do. But overall, the action of the market has been quite constructive. Now we come in today after a big move we saw last week. I think there were a lot of expectations that the Fed would do something, but then as this week progressed, the expectations have been lowered. There is some talk that maybe they extend, the rates language till 2015. I'm not so sure, but I think that they're going to have this strong language. It's going to be dovish. They're not going to do much. They're going to talk about perhaps or hints of what they can do. And then, I think September is going to be the month that everyone starts talking about. So if we start selling off, if numbers come in weaker, market might take it positively. So we'll have to watch the action. But all in all, I don't think we're going to get much, out of today. I think tomorrow with the ECB, that's really where all eyes are going to be.
Why don't we take a quick look at the S&P? I mean, it's been trading in a tight range. It's a big bounce we got last week from the comments of Draghi.
Yeah, people are saying, oh, there's no follow through, but you could look at it two ways. It could be digestion. And if you see the size of last week's move, if you take a look at the chart of the S&P, you'll see ever since the low here in June, we've been following this trend. Looked like we were going to break a little bit below right here before Draghi's comments, and then you had this big push. And in the last two sessions, we've hung in there. It's been very, very quiet, hanging above this downtrend we broke above. So the longer we stay above this 1375, I think the more these pent-up shorts that have been rolling it up since those Draghi comments, or even since down here. I know some guys have been shorting the market since down here. We start breaking above this 1387 to 1391. We could see 14 plus before Labor Day. So I would watch 1375 as your upper floor, 1365 is the line in the sand, and this 1388 to 1391 is big resistance.
Retail has been a sector that has actually overall done well, but we've seen a bifurcation between the high end being under pressure and the low end doing well. What can we expect going forward with this group?
Well, doesn't that make a little common sense? We've been in this sluggish environment for the past 3 years, so who is going out to buy their fifth bag or the Tiffany rings? And retail has been a great place to be. If you look at the RTH, the RTH has been a spot that's been following this trend line. It's at highs, holding above this recent pivot. Stocks like Walmart have been unbelievable all the way to the upside. Target getting a little wishy-washy, but it's also had a big move. I would trade it versus level versus 60. And then you have something like Coach. Disappointing yesterday, but technically, look at this thing, a lot different than Walmart, Target, and Costco working its way lower. So someone knew that earnings might be on the shortfall, and they did not give it a pass. It closed on the lows, so this is still in a void. Tiffany also downtrending below the 200-day. So technically, a lot of these things have told you that high end has not been the place to be. This, the past 2 quarters or so, that really it's the value guys, it's the big box players. That's where, people have been going to because that's made the most sense.
That's true. And there have been other stocks out there that have been doing well, one of which is Apple, a high beta tech stock. Yesterday, they got back to almost where it was trading before earnings.
Right, so if you sidestepped the earnings, and you bought when it went into the gap at 580.80, you did very well. You look at the chart here of Apple, I think it's right back in the games. There's talk of a split, talk about being added to the Dow. Big 3-day move up into the 615. Let's see how it handles this little area, 615 to 620. I'd rather see it pause here, go sideways before it blasts through. But I will say this right here is not the high of the year, 644. I've said it 10 times this year is not going to be where we stole or the historic high. I think we see 7.25 plus. It's just your time frame and if you could hold it long term or if you're trading these intermediate cash flow trends.
Right. Okay. Well, we're going to get into all of this and more in the long form version, so stay tuned for that.
Hello everybody, my name is Pete Renzulli. I'm really excited about introducing you to and inviting you to T3 Live Active Trader Summit. Network and associate with other like-minded people who have a burning desire to learn how to be a trader. There's going to be a ton of great content, strategies, tactics, techniques. Learn to take your trading bigger. Learn how to be a better trader than you are now. Please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both. But come down and expect to have a great time.